You can't build a budget. You can't start talking about a business's financial strategy. You can't talk about strategy at all without having bookkeeping in place. So we want to go by. So for our CFO level clients, what we're delivering to them is we want to see revenue and costs by provider. And you can take that even one step further is by provider, by service. So each provider, what are they delivering and what is the profitability by each provider?
Hey, what's up, everybody? Cam Hemphill here, your host for the Medical Millionaire podcast. Thank you so much for taking the time to tune into the episodes. My goal is to give incredible value and insight for practice owners. So if you own a medical aesthetics practice or you're looking to get into this amazing specialty, every single one of these episodes we bring is to help you elevate your game in aesthetics. I have an incredible guest on, guys, that she's been on before. She's very well educated when it comes to setting up your business, your finances, P&L, balance sheet, cost of goods sold, everything that we need to understand in order to put ourselves in a position to have success, be comfortable with money, comfortable with finances, and understanding how we should set our business up. Should it be an LLC? Should it be an S-Corp? Should it be a C-Corp? There's all these questions we have about business and finance and structuring. So I want to welcome Danielle Hayden to the show. She's been on before, and she has an amazing company. It's Kickstart Accounting. Welcome. How are you?
Thank you so much for having me here. And what I wanted to say as you were saying all that is it's all the good stuff. And I know you guys don't feel that way, but this is finance is the heart of our business, and we love serving this industry, and so I'm excited to be here and be of service.
Yeah, it's this conversation of, hey, I'm going to be a practice owner. I'm going to be an entrepreneur. I'm going to go out. I'm going to sell treatments, neurotoxins. I'm going to make, money. It's this beautiful vanity industry that I keep seeing on social media. I want to be a part of it. Or I compare myself to the medical aesthetics practice around the corner or across the country, and I want to be like them. And so we're in this world of comparison, but we have to set our business up for success. And part of that is understanding business structure, finance, capital, money. Talk to us about your background. I know you worked in this space for a long period of time. You come from a very extensive career in this specialty and vertical that you serve. But give us just an update. What's going on, your background, what you're working on, and what you're seeing in the market.
Yeah. So started Kickstart 10 years ago. However, my background is really as a chief financial officer. Worked as a CFO for mid-sized businesses. What the hell does all that really even mean? It means that it was my job to gather all the financial information for the CEO, board of directors, investors of these businesses to help them make better business decisions. I knew in my heart that there are so many entrepreneurs out there that deserved access to the same information. So I went out to start a CFO consulting firm. And here's what I found, Cameron. You can't build a budget. You can't start talking about a business's financial strategy. You can't talk about strategy at all without having bookkeeping in place. Because if you want to look forward in your business, you have to be able to see where you're going and where you've been. So started Kickstart 10 years ago as a bookkeeping first firm. As entrepreneurs, we can't wait till tax season to look at our numbers to start tax planning. I want every single business owner out there to look at their numbers every single month, make confident business decisions. No comparison game. This is about you and becoming a better CEO than you were yesterday.
Well said. Well said. And completely agree. I think that there's practice owners out there that get in this mindset of scale, 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 grow, 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 revenue, revenue, revenue. I mean, I've seen practices that do 3, 5 million, 7 million top line revenue, total sales, and EBITDA is like 0. So they're
maybe even negative.
maybe
Yes.
even negative, right? And I hear all this racket and conversation of, I crushed my numbers, from last year, this year we're up 30%, 40%, in some cases 100%. I love it. I love growth. I love revenue. Revenue is very, very important. But at the same time, we have to look at cost of goods sold. We have to look at where we're actually spending. And so in this world of aesthetics, when you trade, right, what I mean by that is if you exit, sell, trade up, whatever you want to call it. These practices trade on EBITDA. You could have a $10 million practice, and if you're burning 11 million, it's not, I mean, there's an issue.
Yeah.
And Danielle can peel back those layers and understand what those issues are. And are you spending too much in marketing or team members, or what is that? What do you see there?
There is an ego involved in some of our spending. And I think we're not aligning our goals to where we're spending. So I believe in healthy benchmarking. We should be looking at our revenue, but we need to be looking at where we're spending. So if I am a business owner who is growing a team, then I can't be putting 25-30% of my sales back in advertising and marketing if I also have to buy cost of goods sold and build a team and pay a team. If I have debt in my business, I have to control my costs so that I can have enough cash at the end of the month to pay my debt. So what does that all mean, right? That all sounds well and good, but what I really mean by that is if my goal of the business is to scale the top line revenue this year, this season of business, I'm going to be in growth mode. And so this season, I want to spend between 8 and 10% of my sales in advertising and marketing. If I'm spending more than 10% of my sales in marketing, I need to evaluate what's actually working and what's not working, because I shouldn't long term need to spend that much money in marketing. And if I'm spending less than that, then is that truly actually your goal to grow your revenue?
Yeah. And the practices that I see are underspending on the marketing side.
Definitely underspending.
Yeah, we did a survey, and man, the numbers were astonishing on how much they were underspending and thinking that they were spending a lot, And so this is an advertising marketing game. The ones that spend correctly on marketing, they align revenue with marketing spend in a growth type of season, if you will. Patient bookings do happen.
Yeah.
And, the ones that are overspending, I've seen that too. They're spending 15, 20, 30%, and they still don't track the conversion rates, right? Or what the cost per lead is, and all this marketing spend is going out. And so you can obviously be overspending as well.
Not evaluating what's working and not working. And, we can keep going down the whole income statement, then we can go to um, outside services. We can't, as business owners, do everything in our business. We have to have people in our business who are experts at what they do. So as our business grows, we have to have bookkeepers, tax accountants, VA, OBM, managers of our operations. We have to have people who are outside of ourselves who can help us outside of our business. So spending between 8 and 10% of our sales on outside services. Operating subscriptions is another one where we cannot, as a business, do everything manually. We have to have systems in place in order to be able to operate our business. So that's another area where we want to see between 5 and 8% of our sales in actually operating the costs of the business. And now I don't mean over indulging in different software and systems that are going to automate every piece of our business. There's a time and place for that, but having the right optimization in our business where we're spending so that our time is being spent best as a CEO and not in every area of our business.
Yeah, yeah. Yeah, I mean, if you can automate it and your subscription costs are going to be lower than a body, and you're still going to give the patient experience, those are like my go-to check boxes, right?
Mm-hmm.
You also see a lot of AI that's coming into the automation component. And right now I'm actually kind of going down this interesting path with a group that I'm consulting with. And they have a really cool tech stack, but part of it is manual, part of it is automated. The automated is leaning on AI. And so some decision making that's taking place there does the AI automation part outweigh the human connection part to deliver the patient experience? And so there's some A/B testing that's taking place right now because the AI component is actually pretty expensive, but it automates the flow and it saves time and converts leads better, all that stuff. But does it actually deliver the connection points that make sense? Or so anyway, not to get off topic,
There's a
but
cost to AI. There's a cost to AI. So I'm glad you brought
yeah,
that up.
yeah,
We're seeing it in our clients who are interested in testing and exploring. And I'm not talking about just ChatGPT. I'm talking about really integrating it as part of how they serve their patients and their clients, that comes with a real cost. And so we need to, as we're exploring with curiosity as business owners, that we're measuring those costs. And I don't want you to go any more than a month. Like, you need to be looking at your financials. Every single business owner listening, you have to look at your financials at the end of every month. And that can be high for a season as you test, but we cannot keep those subscriptions that high unless we know that it's coming from another area of our business, and net, that we're still staying at a 10 to 15% profitability as a business.
Yeah, yeah. I agree. I mean, shoot, I even look at my numbers way more regularly than that. But I see practice owners, they obviously, well, most people, okay, let's just say you're entrepreneur, practice owner, if you will, you're not well diverse in QuickBooks Online. It's a tool, you don't know how to do it. Your background's not accounting. Like, I'm going to shoot that off to the bookkeeper. And you should, right? You totally should. But I also think that they throw it over to the bookkeeper and then they're just waiting for these P&Ls to come back. And it's almost like what I'm seeing a lot is like they'll just throw it over. These P&Ls will come back every quarter and they'll look at it. And I think like the only thing that they're truly honestly looking at, not all of them, but for the most part, total sales, net income.
It's a dangerous game.
I'm like, there's a lot in the middle there that you should probably be looking at. And I don't think it should be a PDF, right? Like break it down by the percentage of the revenue that's coming in, so you know where like the percentage of spend is going. Can you talk about that? The
Yeah.
importance of that, like, because there's the lazy CPA. No offense, but there truly is the lazy crap that I've been through it, and then there's like the awesome hands-on person, firm, consulting group that's like, look, here's what I'm seeing, and here's some red flags. Because if you just deliver a P&L, it's like, here you go, I gave you your P&L.
So
Help me
here's
out.
the thing. Yeah, here's the thing. Just like you guys went to school, like all of our practice owners, you went to school and you're good at what you're good at, right? CPAs. Now, I have my CPA. I have my master's degree. Let me tell you how many business classes I actually took. I know how to be a business owner because of outside of education. And so we need podcasts like this. We need each other. But I feel bad for other CPAs because they don't know how to do this. And it is an old school business that is broken. So I am with you. There is some bad business going on in this industry. Now, I'll tell you my standard for our clients. Every single one of our clients receives a monthly financial statement, and that includes P&L, balance sheet, cash flow. And we have a few different variations of that. We also have what we call our snapshot. And the snapshot is an easy to read overview of their numbers that comes in a PDF. Now, you said it's all the information in between. Here's the problem is that most P&Ls are broken out in this QuickBooks dummy chart of accounts. My favorite one for QuickBooks is that there's one that's called office expense and subscriptions. I'm like, well,
Mm-hmm.
which one is it? Those are two very different things.
Yeah.
So we've created a framework
Okay.
that we apply to every single one of our clients' QuickBooks accounts, so that the chart of accounts, so that the income statement is set up in a way that groups your accounts together. So anyway, when you're looking at your numbers, you need to work with somebody who's going to analyze the information for you and put it in a way that's easy for you to read. So
Mm-hmm.
as a business owner, you shouldn't just be throwing an income statement, because what are you supposed to do with that, right? Like, if you haven't gone to school for this, if you haven't been taught how to read an income statement, it's not, it's not your fault. I mean, you can go get educated, but at this point, that's not the best use of your time. So I want you to have a report that breaks that information down for you. So for our clients, they receive revenue, and it's for this month, the quarter, year to date, and rolling 12, and then compared to prior year, compared to prior quarter. Then we go into cost of goods sold. Same metrics, right? We want to compare that this month, this quarter, compared to last quarter, year to date, compared to last year, and you're rolling 12. Going to your operating expenses. Where are you operating your business? I want you to, at a minimum, look at your top 5 expenses. So our clients all receive a chart of their top 5 expenses, both month, quarter, year to date. Your job as the CEO is to say, okay, Where am I spending money? What season of business am I in? And does the spending even align with where I want to go? I mean, I see clients who are spending all this money on paid ads, but they don't even have the capacity to take on another client right now, or payroll, but there's nobody no patience for our new team members to see. So we need to look at our operating expenses. Now, you mentioned net income. We're getting there. See how many things we're in between.
Yep.
Then we need to look at our net income. But it doesn't stop there, because every single one of us, April's coming and we're going to have to pay our tax bill. And so your bookkeeper should be providing you with what we call our tax reserve. So you should have the monthly amount that you need to set aside so that you're prepared for tax season. Then we could talk about the cash flow statement too, because what I just mentioned just literally is the income statement. We didn't even get any further into the other two statements.
Yeah, a lot to unpack there. And I really appreciate how much color you bring to it. Right. So let's talk about just a couple of things for a second. If you were to take a P&L and analyze it, most P&Ls that, and I'm not in your seat, you see way more P&Ls than I do, but I've seen quite a few have come across my desk. And I typically see like cost of goods sold wrapped up into just one lump sum spot. Cost of goods sold, it's just flipped. It's like easy to just throw it all under cost of goods sold. I mean, wouldn't it be advantageous for a practice owner to know exactly what their costs of goods sold were per device or per piece of inventory, so they know exactly what the margin is on those units sold? Or, I mean, I would.
Yeah.
I want to know where my most profitable treatments are, and I want to know where my least profitable treatments are, and I want to know how much revenue came in per treatment, per inventory, per device. I would definitely want to know that. That's going to change how I look at things as a CEO on where I'm going to spend marketing dollars, who I'm going to hire as a provider to fulfill those services. Right?
So you're talking next level, and I'm glad that you're bringing everybody there. What I mentioned is basic, right? So that's your basic P&L. As a business owner, I want your floor, your minimum is to be reviewing the metrics that I mentioned earlier. Kind of step 2 to that is to dig in further to those metrics, to what you were saying. What is my cost? What's my revenue by service line? What are my costs by service line? By provider is another big one. Here's the thing.
Hold on, let's talk about that for a sec. By provider.
Yeah.
Drill in on that for a second, on that, the next level version of that.
So we want to go so for our CFO level clients, what we're delivering to them is we want to see revenue and costs by provider. And you can take that even one step further, is by provider, by service. So each provider, what are they delivering, and what is the profitability by each provider, then by service line?
Why would I want to know that? If I own a medical aesthetics practice, I want to know that. I want to know. I want to put my providers side by side and say, like, this almost comes to the conversation of, on one level, a provider is going to want to raise, the other one, you know what I'm saying? It's like, well, what are the numbers? Are you worth the raise? Because the business can't pay you if you're not producing the result that the business needs in order to pay the raise.
I'm with you, and I agree with you.
Okay.
Here's the what I've seen from the issue. We have to take good care of our data. So if we are not taking the time and energy, either ourselves or with an admin staff, to ensure that our records are well kept, meaning that we understand how much it costs us to deliver a service, that we are entering each sale, and with each sale, we have an accurate item, like what is that service being provided? What's the cost of that? Are we keeping track of the provider that's providing it? What I want to say is shit in is shit out, really, honestly, because we have to take the time to keep track of that information. And look, I know a lot of entrepreneurs, that's not my sweet spot, is that level of detail to be able to keep track. That's why I have to have an admin staff, 4-person operations team here at Kickstart Accounting, because I know that we need to have data. And so I want to encourage everyone to really pay attention to how you're keeping track of that data. Your bookkeeper is not going to be the one to do that for you. That's an admin on-site record keeping. What your bookkeeper and your CFO team are going to do, so we come in afterwards and we pull all that data from the system and we analyze it. But you have to organize the inputting of that information.
Mm-hmm. Hmm.
It sounds basic, but it's way overlooked.
Yeah, yeah. Well, it's complex. It's time consuming. It's
Time consuming.
I don't have time for that. I'm just going to go service the next patient. Moving on. You know what I mean? Laborious. I get it, but there's a cost to looking the other way. That's what I want you to hit home, right? That cost of looking the other way. That cost of not doing the laborious, mundane bullshit that it takes to run a successful business.
Yeah.
Um, is very expensive.
It is because your money team, we need to have a money team. We need to have a bookkeeper. I want every business owner to have a bookkeeper, a CFO, and a tax team member. They cannot help you in the way that is going to be truly meaningful if you don't have that type of information. And so make sure you have the support and the time to input that information so that then your CFO team can come in and pull it out, and they can pull out the highlights and all the details. And you got really excited when we were talking about that, like which provider is the most profitable, which services are most profitable. Imagine dropping the things that aren't making you money. We had a client who, when we started pulling this information for her, so it was about 4 months in that she was receiving her specialized KPIs. And we were showing her revenue and cost profitability by service line and then by provider. Within 4 months, she dropped an entire service line and a team member
Mhm.
because they were costing her money. 4
Eh,
months.
4 months, and, she had no idea to extract that information to make the decision to know, just keep selling that service line because maybe a patient or 2 wants it, and I like the provider, and that's okay. I get there's a relationship there. I
They
get
had
it.
been together for 18 months,
Okay.
and she was so emotionally attached to this provider. But when you have data, right? As a CFO, in my before I started Kickstart, decisions not totally black and white. There's some gray to every decision. However, when you're looking at it in this way with data first, if you're looking at the data first and then add someone's name, it makes it really clear how to make that decision. And that's how we looked at things back in corporate. As entrepreneurs, as business owners, we look at the person first.
Yep.
We attach so much emotion to that service line. That was my first service I ever started. I started with that service. I can't sunset that. I have Sally who's been coming to me for 5 years. If I sunset that, I can't serve Sally anymore.
You bring up such a good point. I think as entrepreneurs and founders, especially in this industry, we get caught up in the emotions and we fail to look at the data. So for the listeners, you guys, like that's so absolutely critical. Maybe a good exercise for you would be table the relationship for a minute. Just table it. Table the emotion for a minute and start looking at true data and true numbers. Maybe you even like run an exercise where you pull up all your providers and you give them different names and then put them how many hours are they working? How much are they making per hour? And what are the services that they're selling? And are those services that they're selling profitable? And look at it from that standpoint and maybe even use AI to help you analyze it and come up with some decisions that can put you in a position to make more robust and, let's say, business centric decisions that are going to help elevate the practice, because the practice is what your emotions should be tied to, the brand,
Yeah.
right? The practice is the heartbeat, right? And everybody around services that heartbeat. And then obviously your patients are like they're like the blood flowing into the heartbeat, if you will. Right. But the minute that practice has a heart attack, all systems fail. you know,
It's true.
it doesn't matter what the relationships are with the providers or with your vendors or
Yeah.
whatever. None of that matters.
I'm gonna take that one step further because it's really hard to I get it as a business owner. It's hard to put together that data. It's hard to look at it that way. Ask your money team to do it for you.
Mm,
So contact your bookkeeper, contact your CFO. They can put together that data for you. They can remove the names and have the data driven conversation with you and then apply the names.
provider A, provider B, provider C,
Yeah,
provider D.
we've done it for clients. So
Which one do you
I
like
just want
better?
to use your team. Use the team members that you have, because if you go to do that type of analytics, it's going to take you a long time to put together that type of report. However, if you have a money team who is well versed in KPIs and Excel, they're going to be able to put that together for you. So you're not showing up, oh, I'm frustrated. I've been playing with Excel all day. I'm pissed off. I've already spent 8 hours in this exercise. Come fresh. Your
Hmm.
job as a CEO, it's not to be in QuickBooks. It's not to be putting together the data. Your job as the CEO is to come in and look at it at that high level. And that's how you're going to be able to make the best business decisions.
Love it. Switching gears for a sec. I hear practice owners talk a lot about, I just set up my LLC, or I'm an S-Corp, or a C-Corp, or, different types of formalities that you could structure in order to make a business. What do you advise? Maybe you can kind of give us pros, cons, difference between an S-Corp, LLC, partnership, single member, multi-member. Talk to us about that.
Yeah. At a minimum, nobody should ever treat a patient, start a business, operate anything without having the LLC first. You should not be operating as a sole proprietor. Need to have, and definitely there is some state ramifications. So from a medical perspective, make sure you're looking at your state laws. However, we need to have that legal protection. Here's the thing is that when you're an L, how you pay yourself is through owner's draws. You're going up to the cash ATM of your business. You're taking out the cash. That's it. You're not a business expense to your business. You're not paying taxes on those dollars. You're going to pay taxes on the profit of the business. When we move from a W-2 employee to becoming a business owner, this is very difficult. Nobody's withholding taxes for you. You are responsible for paying that at the end of the year.
Whether you're
It's a tough.
profitable or not, right? Whether you take a jar or not, the profits, you're paying taxes on the profits.
Yep. Yeah.
Yep.
And
Yep.
that's a tough pill for people to swallow. But here's the thing. I love being able to monitor and watch and help clients understand when to become an S corp. And I'm going to give you like a 3 quick step framework that you can apply. Once your business is doing about $100,000 a year in net income, not gross, not sales, talking net. This is when it becomes tax advantageous to become an S corp. So we need $100,000 a year in net income. If you as a business owner are your personal and your business expenses are completely separate, like you are not commingling, you could be a good fit for an S corp. If you are commingling business and personal, first of all, stop. But second, like it's like going on a diet on Monday, like you're not going to be perfect and don't become an S corp yet. You're not ready. And the third step is that you're regularly paying yourself an owner's draw. Just like the diet on Monday, if you're not paying yourself now, your business isn't going to be able to pay yourself once you become an S corp. Here's the thing. Here's the biggest difference about becoming an S corp. It is a tax advantage for you as a business owner. You get to go on payroll. You become an employee to your business. You are now a business expense to your business. When you go to apply for that house, for the loan, the car, the vehicle, you have a paycheck stub to be able to say, I am an employee of this business. And you're able to manage the flow of cash between your payroll dollars and distributions. One last thing I'll say is that you have to pay yourself a reasonable compensation. This is not Danielle's rule. This is the IRS rule. Have to pay yourself based on where you live and how much you would have to pay someone else to do your job in the business. That's not $50,000, you guys.
Yeah,
I promise you
that
it's more
number's
than
been
that.
lingering for a while.
Yeah. That's why we say $100,000 a year of net income, because for most areas, for this industry, I mean, we're looking between $75,000 and $100,000 a year for reasonable compensation. And so that's how much you have to pay yourself through payroll before you can take an owner's draw. I know it's not fancy. I know it's not, this like I'm not saying like let's go take all this money in distributions. I want you to be able to have a healthy, sustainable business. And you mentioned at the beginning, building a business that can be sold. You have to have an EBITDA that can pay a CEO. Your business is worth more when your business can pay a CEO, needs to be able to pay yourself.
Yeah, absolutely. Better for structuring, better for valuation purposes, and kind of going back to the P&L balance sheet, it's if you have all this stuff set up correctly, and your plan is to go to market to sell at some point, you're going to be much further ahead, and you'll probably get a lift in terms of purchase price by having your ducks in a row, good bookkeeping, good accounting, good business structuring. When a sophisticated buyer comes in and wants to make an acquisition and they invest 10, 20, $30 million to acquire an asset, they do diligence. These are smart people, and they want to look under the hood. So, and I would advise, even if you're not planning on going to market to sell at some point, you probably will. There is an expiration date always. There's no way around it. There is an expiration date no matter what. You're either going to close, sell, transact, hand it down, whatever it is. You might as well sell for as much as you possibly can. At least I would, because you're changing time for dollars for many years. So I think you should just get set up now. Whether you plan to sell in 10 years, get set up now, because it's going to be that much easier down the road. And start to evaluate, does it make sense for you to migrate from LLC to S-Corp? Are you still running this thing in your personal name? Gosh, I hope not. So much liability exposure there.
Yeah.
So
Separate
yeah, I
your
agree.
business and personal.
Yeah. Separate. Yep, absolutely. Because what happens, not that you and I are lawyers by any means, but what happens if there's commingling of funds? What happens there?
You
What are the
you
vulnerabilities?
pierce the corporate veil. So if somebody comes after your business, they're coming after you personally too. So yeah, not an attorney. However, my attorney friends tell me that it is their
We're gonna
best
pierce the
strategy.
corporate veil. How many my attorneys told me that? I'm like, what do you mean by that? What are you talking about? Like, oh my gosh, I heard that so much.
Here's the net story. Separate.
Separate. There you go. Quit commingling.
We had a client who came to us. This was about 6 months ago, and they were approached by an opportunity. She never planned on selling her business. She thought she was going to operate it forever. She came to us. She said, "I need to get my bookkeeping in order because they gave me a figure." She's like, "It's actually lower than I thought it should be." But she had no idea. She didn't have any bookkeeping together. She had nothing but a tax return from the prior year. And her business was devalued because she couldn't have a strategic conversation with them. And she decided not to sell, and she missed out on the opportunity because she didn't have bookkeeping in place to have a negotiation with them. Yeah.
Ouch. Yeah, that would suck. Don't let that be you. Basically is what I'm trying to convey there is be ready. Be ready for anything. You never know when an opportunity comes by, and you want to be prepared. And to your point about commingling, it's real. I'm in lots of entrepreneur groups, have been for many years, and I've seen it's not a matter of if, it's a matter of when. I was actually on the other side of that coin where I was like, yeah, that stuff happens to other people until you go through it. Once you're in the game long enough, you will be sued. You will be, audited. You will get a 1-star review. I mean, you will have an employee threaten you. You will get you will have a patient threaten you. Like you just got to be ready, right? You got to be ready, paper wise, documented wise, financially. And I know you have to bail here soon, but I want to talk about one other thing that I think is really critical, and it's talking about maybe a little bit on the finance side, paying yourself more the smart way, right? I think, practice owners, I think they struggle with this. They work very hard, trading time for dollars, making great income. Are they paying themselves enough? Are they paying themselves too low? Are they, and I have a practice that I'm talking with right now, making great profit. Like they're doing really well. And it seems to me they're housing the profit in a savings account that's giving zero return.
Mm-hmm.
And so not that you're a financial advisor, nor am I, but I've learned a lot as I've grown throughout my career. What does that look like? Paying yourself smart, housing capital smart. Can you talk on that for a sec?
So I think there's a little bit of that comes from our money personality type. And I think we talked about it a little bit the last time I was here, but there's people who need to have that money in a savings account in order to feel safe and secure. But I want to encourage all of us, there's a balance to this. I want every single business owner to have between 1 and 3 months worth of operating expenses in a savings account. And it should be a high yield savings account in your business name, not your personal name. But if you have more than 3 months worth of operating expenses, there's a better use of that cash. So what are you afraid of? You need to evaluate, why are you not reinvesting back in your business? What are you not spending dollars on? And why are you not paying yourself more? There's a reason for that. So past 3 months worth of operating expenses, unless you're saving for something specific, I need to buy a new piece of equipment, I'm going to be expanding in a location, I'm doing a build out, right? If you're saving for an investment, cool. If we're not saving for something, then why are you refusing to take that out in reasonable compensation, giving yourself a bonus, bonusing out your team to have that healthy spending to reinvest back in your business? I think more often than not, I see business owners who are hanging on to those dollars out of fear because that makes them feel empowered. And then you have entrepreneurs on the other side of this, right? Where they have shiny object syndrome.
Yeah.
I'm buying every course. I'm joining every coaching program. I buy every piece of equipment, marketing strategy out there. I have all the softwares. And so if you're overspending, so I'll give you the link when we're done recording for everybody to be able to download our healthy percentages worksheet. Because if you're overspending in each of these areas, you're not going to be profitable, which means you can't have a healthy, sustainable, profitable business. I want everybody to be able to pay themselves at a minimum your reasonable compensation by the IRS. But from there, like, we get to take owner's draws as a business owner, and we can only do that if we're spending within these healthy ranges.
So true. So true. I think, it's more of it's like a relationship that they have with money. Money's a tool that can help accelerate growth, when used appropriately. So I completely agree. I think it maybe goes back to the psychology that some people maybe have with the cash and the capital, and they want to hold on to it for a rainy day or whatever, and it's treated as a savings account or something when it could be deployed to help increase revenue and lower your taxable income, actually, by the way. So strategically, when you do that appropriately.
However, yeah, don't spend a dollar to save 40 cents. So if
Yeah,
your
yeah, for sure.
CPA calls you and says, "Hey, you're profitable, it's time to start spending," I want you to push back. We do not have to spend just because we're profitable. I want every business owner, you should have 15% left over. You should have 15% of your sales as profit. And yes, that means paying taxes on it. But we have to show healthy, profitable businesses. Otherwise, you can't get the loan. You can't get an investor. You can't sell your business. We have to have a healthy business, unless that's not your strategy.
Well, if I was them, I would want to build a healthy business, a thought out strategy, and make sure my numbers were aligned with the style of my growth and the style of my brand. I think everything you say here is super, super important. I know that there is a tremendous amount of practice owners and providers that probably look at a P&L once a year. Uh, Probably are an LLC way longer than they should be,
Mhm.
or there is commingling taking place, or their P&L that they do get every quarter is not baked out correctly, and it's just not talked about enough. It's always like, oh yeah, we grew 20% last year, 50% last year, we're crushing it, we're killing it, this. But what is that truly? Are we being honest with ourselves? You know what I mean? Like the P&L is like the honest. It's black and white. You were a CFO.
Well, I actually want to see your cash flow statement. So yes, the P&L is fun, but we send all of our clients what we call a cash snapshot, and it shows how much money's coming into the business and then how much money's coming out. Because if you have debt, if you're drowning in debt payments every month, you have a high tax bill, personal expenses going through the business, that all shows up on your cash flow report. So the P&L can hide some things where your cash in and cash out of your business. Pay attention. If you are not sleeping at night, I want you to go right to that cash flow statement.
That's going to show expenses. That's going to show income and expenses and show you exactly what your cash flow percentage is, like your gross to net. Is that what you're saying?
So on the cash flow snapshot, you're able to see actual dollars in and out. So on the P&L, you don't see owner's draws, you don't see tax payments, and you don't see debt payments. That's all balance sheet activity.
Mm-hmm.
And so you'll see the cash. So if you have a large loan, right, you built out your space, have $100,000 loan that you're making giant payments on every month, you could say, "Oh, well, I'm really profitable, but I don't understand where all my cash is going." Your
Uh-huh.
cash, though, other than the interest payment, it's not all showing up on the P&L. So we have to pay attention to where the actual cash flow is going, especially if we have debt.
So if somebody's using QuickBooks Online, where would one go to find that? Is in like a specific reporting area or?
So if you go to the reports, you can go to the statement of cash flows, or you could do the balance sheet by month, but the statement of cash flows is going to show you the changes in equity.
Gotcha. Gotcha. Okay. Well, super
So
important to pay
everybody
attention to,
go
guys.
pull your statement of cash flows. That's your homework
Yeah,
right
I'm
here.
gonna go do that right now.
Okay.
No, just kidding. Well, there you have it. I know you're super busy. I really appreciate you joining and coming back again and sharing your expertise and your knowledge. It's super impactful in everything that you do for the community. I really appreciate it, and I know that the listeners do as well. So, where can people connect with you? Where can we find you? How can we ask you questions? You mentioned something about a really cool little snapshot thing that you can fire out.
Yeah.
Where can people find that?
Yeah, go to kickstartaccountinginc.com/gift. In there, you can download the worksheet on how much to pay yourself. You can also find the healthy percentages there as well. So kickstartaccountinginc.com/gift. Come hang out on Instagram at Kickstart Accounting. Ask me any questions there. And our podcast, Business by the Books.
Awesome. Thanks so much, Danielle. I really appreciate
Yeah,
having you on. All right, guys, there you have it. We'll leave it at that. Until next time, happy injecting.